Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? I hope you're having a good day. This is our quick show that we do. We call it the Closing Beat, just to give you an update on the stock market. We like to teach. We're financial advisors with the heart of a teacher, and they always say, if you're going to work with somebody, anybody, an air-conditioned guy, a pool guy, whatever it may be, learn a little something while you're at it. So we like to teach along the way. We've got a class coming up tonight for our customers. We're going to address some things, all right? So we're not going to do it in a speakeasy tonight. We're going to do it over there by the lesson, the classroom there, because the topic of tonight's class is know the plan, trade the plan, right? So I get a lot of questions from customers about stocks that they own that we're not doing here with them, and so we got to get you guys on track. So tonight, grab a glass of wine with us for our Wine and Wealth class. If you're one of our customers, we're going to talk about the plan. I'm going to lay out some details for you to make you guys better out there, because I know a lot of people are trading. Hey, anyways, for the rest of you, we got the stock market here off to your right-hand side. A little bit of a down day today, sort of misleading overall, depending on when you looked at the markets. We'll go through all of that, of course. You see the Dow down almost 1%, S&P just a little down day there, was much worse throughout the day. The NASDAQ rallied back, went positive, and is really positive after hours here. And the Russell 2000, slight down day overall. So let's talk about it. Let's go on over here to the charts. Here's the S&P 500 on the screen. We're going to start with the NASDAQ, though, actually. NASDAQ was positive today. It started off the day quite negative and rallied back. Now, sure, it's going to be the names that we normally look at. It's going to be your Apple, right? Had a good day after hours as well. It's going to be the Amazons of the world, but QCOM stands out today. We talked about this yesterday at the end of the show. QCOM reported earnings did better than expected overall. They got to deal with Huawei. So that stock was up 15% today. 1/10 of the gains that you see on the NASDAQ overall today came from QCOM. So there you go, a rare one. We normally don't get to see it there. Obviously a good day for QCOM, looking pretty sweet there with their deal breaking out. We own that one, so I'm happy to see that happen. All right, you got the Dow as well, flirting around the 200-day moving average. Just can't seem to get anything done today. It was going to be your financials that dragged on the day. Financials were the biggest drag on the Dow. In fact, if you look at the Dow, the losses on the day, at the low today, financials were responsible for about 65 points in the Dow. So if the financials would have kicked back in, we almost would have went positive on the Dow. But you had names like Goldman Sachs that stayed lower by 1.5% on the day today. In the Dow, you also had JP Morgan down 2.5%, and American Express, I believe, was down 2%, erasing all of yesterday's gains, by the way. Not really good there. When you look at the markets, if you looked at them this morning, you might have thought, hey, we're down quite a bit. This GDP thing's not a big deal. And truthfully, yeah, it was a nasty number. We all expected a nasty number. It actually came in better than expected. I'll talk about that in a second. But be careful how you follow the media, because they're just, doing their thing, talking about the markets. But if we were to go back and just kind of go zoom in over here. Here is overnight in the stock market. So the market was already selling off. You had German GDP numbers came out, and that's what really pushed us lower. We get all the way down here to about 32.10 and floundered around for a little bit. This is where the actual numbers came out. 8:30 is where we got that GDP number. So we really didn't fall much more after that. Granted, I mean, that's a sizable drop, but the majority of the drop had already happened. So the stock market was already down to start the day before the GDP numbers came out. Speaking of GDP, we'll take a look. I'm going to go right here. There you go. Here's the GDP numbers that came out, minus 32%. I went back as far as I could. We're going all the way back into the 40s. Yeah, we're going back to about 1945. Here you go. Here's the worst GDP readings as you work your way to the right. The gray area in the background is every recession as they were marked. And you can see this is the worst number basically in history as far as we can show back. So not good. If you didn't believe we were in a recession already, maybe that does it for you there. We had a decline of 32.9%. As you can see on the chart there, the average estimate was for a loss of 34.5%. So number one, you look at that and you go, okay, it's a little bit better than expected. Any time in history where GDP would have been 1.6% better than expected, you'd have a rally that probably would have halted the markets. I mean, it would have been an amazing rally. But because we're talking about such large numbers here today, stock market said, oh, maybe that's not so good. Then they realized, okay, that spread's actually pretty good. It wasn't as bad as we thought. Still nasty. And so the stock market's moved higher there, or attempted to try to move higher there. One problem we have is jobless claims. They came out as well. Here's the initial claims for unemployment. It's horrible. We're still sitting at 1.42 million people that are filing for new unemployment. Like last week they had a job, this week they filed for unemployment. That's not good. We've been talking about how continuing claims was going to be the focus overall. That's not good either. That one went higher. So if you're looking for something negative that could have pushed the markets lower or maybe motivated the government to get on the stimulus plan there, 17 million people still continuing to collect unemployment. That is just off the charts. Here, look, I'll just zoom out. We'll go back here to 1950. Look at how massive that is. That's still super nasty there. So certainly something that deservedly could have moved the markets lower by a lot more today. So I would say today showed quite a bit of strength, actually, for the markets to do what they did. Now, we're going to follow up on yesterday's topic about the decile analysis that we did. I'm going to share it in maybe a little easier way to kind of explain my talking point. But before I do that, hopefully you'll check out our FinTips videos. We got 4 retirement mistakes that will keep you from going broke in retirement. We did RMDs yesterday, and tomorrow we're going to talk about the CARES Act, which expires tomorrow, and how that affects your student loans. That will be the topic of our discussion there tomorrow. Like I said, tonight's class is going to be about trading plans. We are not active traders here for our long-term retirement accounts for our customers, but we realize that our customers are, and so if I can help them grow their dough in that fashion, even though I'm not touching it, I'm not charging them for it, it's not something that we do, I'm happy to help, and I see a lot of room for improvement with the emails that I've been getting lately, so I'm going to be a little tough on you guys tonight. We'll go through that. In the research section, if you're not one of our customers, jazzwealth.com/research, look for a live class coming up soon on that where I'll give you one of our topics. We'll go through everything, share what we have in there, teach you something new. But otherwise, you can check that out. It's $13 a month. It really helps us out, believe it or not. So we're going to keep working on that. Got a video coming up about the first 5 to 6 days in August. What's it supposed to be like? Yeah, you probably want to know that. So we'll go through that in a video format. All right, let's move on to the sector breakdown so we can get to the good stuff here today. Taking a look at the sectors, we've color-coded them by performance for the day. Every one of them was higher yesterday, and today they all started lower. 3 of them made it back into the green, as you could tell. Technology, utilities, and communication services. Utilities just squeaked it out, by the way. A couple that I want to point out to you that may be interesting. Energy, down about 4% on the day. That was the weakest out of the group by far. Oil was down on the day. Oh, that's not oil. There's oil. Finally breaking down out of that range. However, it did recover, so putting a little bit of a question mark on this most recent move in oil. But because of that, energy stocks were a little bit lower on the day. The big names in the group were lower and finished near lows. This is nasty. ExxonMobil down 5% on the day. You look at Chevron, also down 4% on the day as well. Apache stands out as one that was a gainer in the space there, was 17% gain. If that doesn't stand out to you, I don't know what to do. But Apache stand out today, 17% earnings. Obviously, it was really good. A number of upgrades that they got there. They also announced a major oil discovery in Suriname. So that stock was higher on that benefit, hopefully, for them. Financials basically were the second weakest of the group today. Not too good day. Gap down to reverse the entire day's gains yesterday. That's not cool. It did recover a little bit there. This is a very tough sector to participate in because it's kind of moving sideways. There's a handful of those sectors out there that people are just choosing to avoid right now. We already mentioned JP Morgan being weak on the day. If we look at Citigroup, also kind of a tough pattern there. It's just tough to participate in these banks. One day you think you're safe, the next day you're a little bit worried, so that continues. Industrials, right back here in this quiet zone here. We talked about this, kind of a highlight lesson for the week, where we were talking about looking for individual stocks that are already outperforming in the space, like UPS. I didn't know it was going to do that. I mean, that's an amazing day. Obviously, we're happy to see that happen. But UPS higher as well. And FedEx, those were some of the ones on our watch list there to kind of give you the heads up before that actually happened. So that's cool. You've got healthcare holding up near highs there, looking pretty good. So far, it's still up about 5% year to date. And I would say this one for the moment is shaping up to be the sector that shows that it has the greatest potential, right? There's a lot of virus-related news in there that could be good for them, but this one's really holding up overall. The market's pulling back here a little bit recently. Healthcare did not really budge. Semiconductors, not a sector, but semiconductors here did well today. You got QCOM in the mix. You got Lam Research in the mix, was it? Lam Research, yep, good strong move on them. They beat on earnings by 87 cents and raised their guidance. There's a lot of companies raising guidance this quarter, which has been rare, so that's starting to perk up even more. And of course, you got AMD just blasting off, getting towards the end of a pattern here. So in the short term, a little bit towards, you would say, end of the short-term pattern, but overall, a great day, right? About 3% gain on the day. Looking at gold, you got gold pulling back just a little bit after being extended. We talked about that. Also, end of pattern sort of thing happening there. It was down about 0.5% today. 1966 an ounce is where it finished off for them. Also, Newmont finished down 3.28%. This is a gold miner in the space. Their average is to be only positive. They had earnings, by the way. averages that earnings is positive 47% of the time on earnings day, so kind of a coin flip overall, but it did lean to the negative side today. Traded just outside of its average move. Average move 3.17%. It traded lower by 3.28. Very, very close, but just outside the move for the day. And that's really it that I have for the sectors overall. Let's go to the lesson that I want to share with you from yesterday. You may remember this. Yesterday we talked about the market rally in 3 different stages and highlighted that. I won't go over that again. But what we did is we said, okay, in this last little bit of a rally here, we know that FANG and tech stocks led the way. I shared this chart with you to say how have stocks performed relative to their dividend yield during this last blue area, right? This little guy right here. Went on a whole little rant about that. What we found was, in this most recent rally in the stock market, those with the higher dividends performed worse, and as you move towards those with little to no dividends, they performed the best overall, right? So what we had is breaking the S&P into deciles, which is a fancy way of saying making 10 different portfolios of 50 stocks apiece. So this would be 50 stocks, 50 stocks, 50, and so on. But the criteria for being in that portfolio was it had to pay the highest dividend. It had to pay the second highest dividend, third, fourth, and so on and so on. So we went through that and we said, hey, what's interesting is over the last 9 days, those with the highest dividends are actually getting a bit of a recovery. And in fact, they're bouncing more than those with no dividends or very little dividends. So we thought that was kind of interesting. Shared this with you, a little bit overwhelming. Understand, here's another way to look at it, right? If we plotted every single one of those stocks on a chart, here you go. So this is taking all of those stocks in the S&P 500, breaking them down over the blue area. So this is the performance during this time period, not including the last 9 days, now 10 days, and not including anything before that. So this is the S&P by stock performance in that category right there. Here's what you have. So you look at this. You can very clearly see that those with the highest dividends down here performed the least. As you work your way towards higher dividends, you in fact get worse and worse performance. As you work your way to the left, those with little to no dividends perform the best on average, right? And that's what we're trying to show there. One quick thing here, this guy here, this is going to be all the stocks that just flat out cut their dividend. There's not really anything to learn from that other than stocks that cut their dividend overall generally did not perform as well. That's not really the lesson today. What I wanted to show you was, okay, this is the performance during the blue area. Let's now do what we did on that bar chart and say, what about over here? So this area here. You remember from the bar chart, we found that dividend stocks were on average performing better than those that were not dividend stocks. So if we plot that performance, look what you have. All of a sudden, these stocks have moved lower, and these stocks paying higher dividends have moved higher. It's exactly what I'm showing you on that previous bar chart, only now you can see that. It's very simple to see that those with lower dividends actually took a break, not that they performed bad, just took a bit of a break there, while those with higher dividends performed better. In other words, you take this line right here and you could say, okay, now we have this going on, right? We've got essentially a little bit of an uptick there, just ever so slightly. That's the exact same thing that you see here. Those with higher dividends performing a little bit better, those with lower or no dividends performing a little bit worse. It's just another way to take a look at it, and if you can read that, you can actually see the stocks in there. I shared some stocks with you yesterday as well. So that was just something I wanted to cover real quick for you. Hopefully that helps you there. Let's go over to new highs for the day. So for new highs on our list here, you actually have 29 new highs, not 39. Our thing didn't update there, but there's a couple items there to point out. I want to jump to something like Duke Realty. There you go. We talked about this yesterday. It was one of the better performers. Overall looking pretty good. You had a good list of REITs in the mix, but it was the ones that outperformed. So it's going to be your Prologis, PLD, getting towards the end of a pattern here. All of these, by the way. Equinix also did well today, 52-week highs, getting near the end of a pattern there. And Digital Realty was another one. So obviously did well, new 52-week highs. These are all short-term, end-of-pattern type plays. If you look at the list there, that we're going to go through some of the other ones that you see there. Qorvo adding new 52-week highs, looking really strong, very, very strong day today, double-digit gains. We did Digital Realty. You know about AMD already. Otis, which I say Otis Elevator. They call themselves Otis Worldwide. New 52-week highs. This is a spin-off, remember, so doing very well, continues to do well. It's just one of those uptrends that has done quite well. And then Ansys, these guys, this is like software, but it actually make a profit, first of all. But this is like engineering software, engineering modeling type software. So these guys did well, 52-week highs and a really, really strong power trend. So just something to point out to you there. There were no 52-week lows again. I just keep repeating myself because that's what's going on overall. So we'll move on to the watch list. Here's a different way to look for breakout stocks. I get this question all the time. All right, you're sharing these ideas, these stocks, that's awesome, but how do I go and scan for those? How do I actually go make that happen? I'm using this scanner, I'm a programmer, whatever it happens to be. Well, on the list, what I did is I put a bunch of breakout stocks, and then we actually filtered these a little bit tighter for you so you can get a feel for what we're talking about. Let me show you. First one, A Biomed. You notice that in the short term, it's breaking out. How in the heck do you get a computer or a scanner to just spit this stock out so you don't have to scan through thousands of stocks? Well, what we did is we said, okay, it has to be a stock that has been within 1% of hitting a new 52-week high more than 5 times in the last 2 weeks, right? So this is a great example. It was the new 52-week high is right here, right? So we just draw a little bit of a line, and you say, okay, show me any stock that's within 1% of going above that number at least 5 times in the last 2 weeks. If you do something like that, it's very, you're not going to get a stock that looks like this. It's not just going to show you that pattern because you only have a 2-week window for it to be up here. And what you're saying is I need 5 times right there. No higher, just 5 times right there before anything happens. So a real simple way to take a look at that and spit out a few names for you. Here's Clorox, although today it did move a little bit higher. It's already starting to kind of break out there. It's more of an uptrend. ACN, you could very easily see, okay, we got within 1% of that new 52-week high 5 times or more in the last 2 weeks. Charter Communications, moving down the list there. Same thing. Naturally, these stocks are in uptrends. You don't have to put any other criteria like above the 50-day or, some other garbage like that. Only other thing you might filter a scanner for is, hey, show me in the S&P 500 all stocks that got within 1% of a 52-week high 5 times or more within the last 2 weeks. So you don't have to bother messing around with a lot of other stuff. And so if you don't have anything, I just will share a couple of these with you here. IPGP is another one there. On the list, you can see the rest of them. Info I thought was interesting here. This is a data company for the markets here, or economic data company. But anyways, so hitting the new almost hitting new 52-week highs, but also trying to break out for a bigger pattern there. So I kind of like that. And Costco was okay, but it fell today, right? So maybe just one for a watch list, maybe a pullback buy there that then you enjoy the breakout once you're already in. But that's a quick way to kind of go through those. And hey, I hope that helps. So just a quick short lesson there. Stocks in the news, we've got a lot of them here, so I'll go briefly through them. QCOM, we already talked about the deal there. Also, hey, congratulations. How can I do this here? Can we go... let's go as far back as we can. Max available. And just for fun, let's see how she looks. Because this is a reason to celebrate here. I can't... Oh, let's go back here. There we go. Congratulations. Oh, it still doesn't go back far enough. Okay. So had you bought Qualcomm on the very first day of 2000, right? The year 2000, as of today, you'd officially have a profit, right? So 20 years later, plus 6 months, you would have a profit. In fact, Qualcomm hit new 52-week highs, but it also hit new all-time highs. And so on the January 3rd, 2000, it was trading at this price. Spent the next 20 years moving lower, sideways, trying. So if you held it for 20 years, yeah, you did good, right? You made a profit. You're starting to enjoy the fruits of your investment there. So kind of interesting there, and also I'm sort of joking. UPS moving higher there as well. They had earnings. They beat by $1.05. Revenues came in better than expected. No guidance overall. Not a problem. Kraft Heinz pulling back a little bit after earnings there. Earnings beat. They said demand is strong. They did have a $2.9 billion write-off, which came from Oscar Mayer and Maxwell House, a couple other brands out there that didn't do as well. And so investors took their profits there. Duncan, never type that symbol. A little bit lower on the day, down 4% earnings, and I think they're closing like 800 stores, something like that. So not amazing for them. And then Lam Research, which I already pointed out, hit new 52-week highs. Earnings, great. They did really well there. Like I said, beat by 87 cents. They actually raised their guidance, and they got a number of upgrades. I think they got like 6 or 7 upgrades today. JP Morgan, Goldman Sachs, Wells Fargo, Deutsche Bank, and Stifel are the first 5 that jump out on my list there. So they're very excited about the semiconductor space. Let's go on to earnings happening right now because there's some interesting ones today. Apple. So Apple's trading $21 higher, or 5.5% higher. It's up here at 405. That's going to be new 52-week highs for the tomorrow's list if it opens up there. So Apple, good, right? Earnings good, revenue good by a lot. They're doing a 4-for-1 stock split, actually, which is convenient because the stock price is at $400. So you know what that means. A 4-for-1 stock split is just a fancy way of saying they're going to give you four shares for every one that you own, but to make it fair, they're going to drop the price by 4 times. So essentially, you will have 4 times as many shares, but soon the stock price will only be about $100. Last time they did a 7-for-1 when they were around $700. Apple likes to keep their price low. And so that's probably the biggest announcement out of the group there. That's kind of cool. So there you go. Amazon in the news as well. They've got earnings. They're up $153, 32.05. Not quite new highs, but it puts them right about there at the moment. So good earnings. Actually, really, really good earnings. Revenue beat by $7 billion. $7 billion. Sales up 40%. Earnings better, way better than expected there. Good job. There's nothing bad to say about that earnings report from first glance there. Stock is higher. Facebook is also higher. Yep, 7% higher, up $16, around $250. That is new highs. Yep. So Facebook's going to hit new 52-week highs tomorrow. It looks like earnings per share were well above, actually. They were well above the highest estimates on Wall Street. Revenue came in better than expected, up. We were expecting 3%. It looks like they beat by 11%. Okay, revenue is really good there. It's a good thing these guys didn't have their little White House or Congress press thingy yesterday or today. Jesus. Okay. Daily active users, awesome. Strong increase there. Monthly active users, way higher than expected. I'm guessing everybody's staying at home playing on Facebook. There you go. So they did really well. All of those stocks are higher after hours, which means if you look at the NASDAQ, the NASDAQ is now up 2%. So go back to this screen, the 0.43%. So the NASDAQ gains over 1.5%, 1.6% on those and others' earnings. I think Alphabet came out as well. They didn't do as well. And then if you have questions, let me know because I'm about to do that. Alphabet's up 0.5% after hours. Meh. Okay, so that pushes the NASDAQ higher, and actually it's going to push the S&P higher tomorrow, already has. So the S&P down 1/3%. It has now erased all of that and positive by almost 0.5%, almost perfectly after hours, up 15 points, 32.67 there at the after hours close. So looking strong for tomorrow, unless all 3 of those stocks and 4, Alphabet as well, fall sometime between now and tomorrow morning, you're looking at a move higher tomorrow. Awesome. So we'll see. You also have earnings coming out tomorrow. AbbVie, Caterpillar, Church & Dwight, Charter, which was on the watch list, the breakout watch list. Colgate, CVX, which could really use a good earnings report, by the way. Goodyear Tires, Illinois Tool Works, Johnson Controls, Merck, Phillips 66, which could also use a really good earnings report. And ExxonMobil, which finally also could use a really, you catch it? The energy stocks really need some help there. Dividends coming out tomorrow. One Oak, 94 cents. Hasbro, 68 cents. Paychex, 62 cents. Citigroup, 51 cents. Casey's General Stores, 32 cents. Cool store, by the way. Kinder Morgan, 26 cents. I hope you enjoy those dividends there. All right, I'll take a look at your questions, see if I can help you there, and we'll move on to our class tonight, because boy, we got to work with you guys. We got to help you guys out there. Yep. If you were to look, are we really in a pandemic? If you were to look at only those earnings today from those 3 companies and not realize that that's like $5 trillion worth of market cap, probably more than that at this point, you would think, oh wow, everything's good. Think about what those companies do, right? Those are not your everyday companies. Yep. Can ETFs split like stocks? Absolutely, and they do frequently, especially the leveraged ETFs. Very frequently do they split. Yep, but you can. Yep. How much will the Dow fall when Apple splits? Last time it didn't fall at all. So I don't know why it would. It's just a stock split. Doesn't change anything. Generally, doesn't change anything. So that's it. I love it. You won't see anything there. Mm-hmm. Apple 4-to-1 split. How do stocks perform after a split typically? Well, you could use last time. They did a 7-for-1 split there. It was higher afterwards, but it's not a reason to take any action. You're just everybody just wakes up and nothing changes. The notional value of your position doesn't change. If you had invested $20,000, you will still have $20,000 invested. It's just that now the stock price will be less and you'll have a whole lot more shares. Yep. Oh, yeah. Can you take a look at Cigna's earnings? Absolutely. They did report today. The stock was basically flat on the news there. They beat by 65 cents. Their guidance was as expected. Revenues came in as expected, but they guided in line. You're going to start to see that now. I mentioned that a couple times now where companies are guiding higher, not by a lot, but they're guiding higher. And actually to the tune of, if you add everything up, guidance is already positive versus negative. So the overall spread is positive now. Cigna didn't do that. I think any companies that report from here, now that we have a taste of higher guidance, any companies that don't raise guidance or give us a little taste of something, likely are not going to get a whole lot of attention. That's probably what happened today. Yep. No, nothing changes there with the stock split. Nothing changes. Just shares. That's the only thing that changes. If you had 400 shares, or if you had 100 shares, now you're going to have 400 shares, but at a price that's 4 times lower. Nothing else changes. If you own options, but it's a good question. How does it affect your options? There will be special options, actually. There will be split adjusted options that sometimes some brokers won't let you start new positions on them, but if you own something, like say you own calls for December for whatever reason, and the stock splits between now and then, which it will, you'll just have it'll be a special option chain for you. So no worries there. That happens all the time, especially with the ETFs out there. Yep. Guild missed on earnings overall, not good for them. Stock is lower. You are correct. After hours Guild is not updating. Oh, $70. Yeah, right around $70. What's interesting about Guild, by the way, this is a gap down reversal pattern. I don't know if you have a fancy name for it, but anytime a stock is moving lower, already we could argue is extended, and then gaps lower, you typically see people come and try to buy that, right? Think about what happens there. You have people staring at this all night going, okay, from here to here, it's already fallen 10%. If we open at 70 tomorrow, we're going to be down about 11, 12%. So people look at that as you had exhaustion to the downside. Now you have a little bit of panic, people selling, they're deciding to get out of the way. Usually you see that reverse. If you remind me tomorrow, we'll come back and look at this one. I don't often look at this sector, but that'd be a fun one to watch, right? Same thing on the way up. If for whatever reason a stock is trending higher, getting a little extended, then gaps higher, you typically see a little weakness. There was one yesterday. I can't remember off the top of my head. Chevron does report tomorrow. Yes, Chevron reports tomorrow, expecting a loss of I think $1.89. We'll see what happens. Yep. It must make sense to buy pre-split versus post-split since it will theoretically go up once the price is lower. There's no difference, right? So if Apple was going to go from 400 to 500, it's going to go from 100 to 125. It's the same. Whatever was going to happen with the stock is going to happen. There's no game to play there. If there was, we'd be talking about that right now. Yep. What'd you think about getting out of a leveraged ETF? Thinking things could get bad. If I owned a leveraged ETF for more than 1 day, yes, I would think about getting out of it. You are not supposed to own those for more than 1 day. The company tells you that themselves. Why? Because they feel bad. It costs you a lot of money that you don't get to see to own that position. Those are meant for overnight hedges only. They know that you guys are out there buying them, but overnight only. Yep. That's an argument, Harry. Yeah, I've seen that where people argue for Amazon to split, Tesla and things like that. And then the argument is, well, it doesn't matter. If I can own a half a share. I can own 1/10,000th of a share if that's all I had. Or what was it? Schwab or somebody that was like, now you can buy $5 slices or something. Yeah, same thing, right? Yep. All right, well, cool. I'm going to wrap it up there. Get ready for our class tonight. Look, if you're one of our customers and you're out there buying and selling and you just throw me these questions like, what do you think of this stock? What do you think of that one? I'm going to now start picking on you a little bit. And so tonight I have a few examples, not only of what we should be looking for, but also how do you go about this, right? This is a game that you play, and in any game, there is strategery, and I feel like a lot of people have no strategy. So I'll help you at least develop that. So we'll work on that a little bit later. Grab a glass of wine, come hang out with us. I will wrap it up from there. Do appreciate you guys hanging out today. You guys always tell me, I'm supposed to say hit the subscribe button or there's a thumb button somewhere. If you just, whatever helps us, if you'll just hit the button, I guess I'm supposed to ask you to do that. I appreciate it. Have a great rest of your day.